Welcome back to Inside Out. This is our Spotlight segment, and on this segment today we have EPL, which is a manufacturer of multi-layer, laminated and also collapsible plastic tubes. And these tubes are used in packaging of consumer products in various segments like oral care, beauty and cosmetics, health and pharma, food and home care as well. Now, in terms of category split, personal care and beyond is 47% of the revenues, which consists of beauty and cosmetics, pharma, etc. And oral care is the bigger chunk at 53%. In the oral care segment, company signs long-term contracts with clients for around 3 to 5 years. And in the personal care segment, the market value is 3 to 4 times of oral care. And this means higher margins in this segment as well. The company operates in Middle East and South Asia with 35.5% contribution to revenues and 20.8% margins. East Asian Pacific with revenue contribution at 21.8%, 20.6% margins. Europe with revenue contribution at 22.2% but margins at 13.6%. And Americas with revenue contribution at 13.6%, margins at 10.8%. Now, company has clients in both export and domestic markets, include the likes of Colgate, P&G, Tesco, Amway, GSK, Patanjali, Himalaya, Imami, Cipla, to name a few. Now, company makes 8 billion tubes per annum and has 36% global market share and also 7 to 8% market share in personal care tubes. Now, on to the financials. Revenues, they have been around 2,700 crore rupees in FY19 and FY20. They moved higher to 3,000 crore rupees and then to 3,400 crore rupees. So yes, while revenues have been growing, margins have been under pressure. From levels of 20%, they have now fallen to levels of 15%. Profits too have been range-bound. They have been hovering around that 244 to 250 crore mark. Now, out of the sales that I just spoke about, 50% sales come in from the long-term contracts, majorly in the oral care segment. I spoke about margins being under pressure. The raw materials of the company are aluminium foil and polymers. So while the prices here have fallen quarter on quarter in quarter 3, they are still higher than the pre-pandemic levels in dollar terms. So that continues to be a worry. The company, in terms of expansion plans, entered Brazil. This is on the back of commitment from a global customer, and company says next quarter onwards, meaningful volumes will come from the Brazil plant. So let's talk about the risks as well. The major risk would be higher raw material prices. That continues to be a worry. Company has exposure to many global markets, so currency fluctuation is a risk, and oral care dominates revenues led mostly by toothpaste, so this could lead to concentration risk. In terms of outlook, company is confident as they expect double-digit growth as China is recovering now, and they are undertaking price increases which will cover for cost of higher inflation in Western geographies. Company post Q3 indicated that they remain hungry for acquisition. Interestingly, they have identified some in Europe due to the weakness seen in that market, and they remain open to good M&A opportunities. Now let's talk about the shareholding pattern. In April 2019, Blackstone Group acquired EPL and post-acquisition had a stake of 75%. They sold the stake in September 2020. Epsilon PT Limited, which is the Blackstone entity, sold around 22.5% stake in the company, which means now the promoter holds 51.5% stake, mutual funds around 10.33%, FPIs at 12.13%, erstwhile promoter group, that is Ashok Kumar Gold Trust at 7.6%, and other trusts at 7.61%. The valuations for the stock, they stand at 16.3 times FY23 EPS, which is a reasonable number. Now with that, we have run out of time in this episode of Inside Out. It's a goodbye from Nigel and I. But do write to us and tell us the companies you want us to discuss and you want to hear about. We'll try to feature them on our show. Thanks a lot for watching.